Hi, everyone. Welcome to the event, the second webinar. So we're having some technical issues and we have not sent it out to everyone. We just sent the link to everyone. So we have to wait a little bit to get more people in place. So let's wait for 5 minutes to get people in place, okay? Hi, everyone. We're waiting. Let's talk a little bit about today. And today is the second webinar, webinar 2. This is still part of a 3-part series on decentralized finance and a 3-part series of the webinars. I know a lot of webinars today are usually really, really long. So, like an entire day. But because we're today on the crypto space, we are all on these digital spaces, we get distracted very easily. So each of these webinars are just cut to 2 hours long. And the last time I had a lot of complaints because we packed the entire 2 hours with just introduction to DeFi. So webinar 1 was just introduction to DeFi. It went very well. We talked about what is there in DeFi, how do we move from traditional finance or traditional USD to decentralized money, so like Bitcoins, all the way to the DeFi space where we are today. We talked about the different risks, the rewards, the different kind of doubts that you have in place, like Ponzi scams. Is this all a Ponzi scam? And also we talked about how to get started. So how to get started with all these different types of tools available, what is yield farming, what are the tools to start yield farming. So we did all those introductions. The thing is, that's a lot of information, right? And in crypto world, we like to say that one day in the crypto world is 1 week in the real world. So that is a lot of information in just 2 hours. And because of that, there isn't a lot of space and time to have a lot of Q&A. There are a lot of complaints. I heard and I received all your complaints. So in this webinar, the second webinar, what we're going to do is to introduce all these different dApps and applications and protocols available in the DeFi space. We're going to introduce some of the projects. We have great, brilliant people with us today. And also we're going to share we're going to have a big session on the Q&A. So feel free to ask questions. If you go down, you can see ask questions segment. You can ask your questions there, or you can put them in the chat. And with that, we can have a lot more conversations going on, and we're going to be answering questions. I have a lot of time today. I allocated enough time today to answer all the questions, because I think the space is quite complicated. And as much as we can educate you talking about all the fundamentals, sometimes we go from step 1 to step 10 because we assume that you know from step 2 to step 9. But that's not a good assumption. So that's why there's this huge Q&A going on. So you can ask questions and ask a lot of questions, because now is the best time to ask questions. And there's no such thing as stupid questions. Don't worry about it. I ask a lot of stupid questions. And it's okay. It's all part of the learning process. So if you have questions, just ask. I think we're slowly getting more people in. So I think I'll start some introductions, and then we can get started. Okay? So once again, today we are going to introduce the DeFi space. And because it's decentralized finance, right? So think of decentralized as in you buy Legos and you have all these different Lego pieces. Because it's decentralized, they're not owned by anyone. So what you can do is to take these pieces together, build them up into this beautiful skyscraper. So that's decentralized. And then we're going to have Q&As after. This project or this webinar series will not be possible without our sponsors and partners. And I want to give a shout out to them. We've got Shark Finance. We have MakerDAO in the space. We have Aavegotchi. We have Bancor. And these are a few of these partners and sponsors that we have with us. This will not be possible without them because, as I mentioned, everything here is all about educational stuff. We are not selling anything, and we're just focused on educating you guys in the space. You can be crypto holders and you want to understand how to get into the DeFi space, or you're completely new in the financial space and you want to understand what is the difference between traditional finance and decentralized finance. So that's what we're here for. We're to educate you. So we're not selling anything and we're not making any money out of this. And because of that, everything is self-financed. And because everything is self-financed, we rely on sponsors and partners to help us, because these tech cost money, people cost money, and we're very grateful for them. If you want to learn more about all these sponsors, just head on to the chat and they'll be talking and they'll be introducing all the different really, really great sponsors. That being said, I need to have a disclaimer, because legally I need to mention this disclaimer. Especially for this webinar, we're going to introduce a lot of projects, a lot of names, protocols, projects, they will be shared. And because it's legally binding, I have to say that none of this is financial advice. All the projects and partners and everyone that we mentioned, there are not any endorsement in any way, shape, or form. What we're doing here is to introduce you, to teach you, and to give you some understanding of what is available in the space. So nothing is financial advice. Please do your own research. Please do your own due diligence, because this is very important moving forward. The whole thing about decentralized finance is that we're decentralizing power as well. And with power comes great responsibility. So when we're decentralizing power, we're decentralizing responsibility. No one is going to be responsible for all your investment, for where you're allocating your money, for how you allocate your money, for where you keep your private keys. Because now we're giving the power to people, to peer. It's all peer-to-peer. That means you also hold the responsibility. You are responsible for all the trades you make, for all the private keys that you have. Because of that, please do your own due diligence, because that's very, very, very important. So I think let's get started, and people will start filling in. No worries. And let's get started with the first session, which is me again, on the DeFi ecosystem and the overview of the DeFi ecosystem. Let me share my screen. Great. Okay, so this is what I want to share is the entire DeFi ecosystem, the overview of the DeFi space. And for us to understand the overview of the DeFi space, we're going to look at traditional finance and compare it with decentralized finance. And with that, we can understand the dApps or the protocols available in the ecosystem. If you look at traditional finance, whenever you ask someone, oh, what industry are you in? And people say finance, usually the questions just kind of stop over there, you know? People don't ask, oh, what do you do in finance? Maybe the most that you ask is trade. Now, I'm a trader. But people don't ask, oh, what kind of trade do you do? Do you do FX trade, commodities trade, derivatives trade, or currency trade, or crypto trade? Usually when we talk about finance, we just stop over there. It's very different from, let's say, if you introduce yourself as, I'm a teacher. And people will be asking, oh, what do you teach? You teach history? What's the subject that you teach? What level? Do you teach in college? Do you teach in high school? There's a lot more questions if you're asking someone if you're a teacher. Or if you're a doctor, they'll be asking stuff like, oh, are you a surgeon? Are you a pediatrician? Are you a gynecologist? With finance, it's a little bit more difficult because finance is so complicated. And because it's so complicated, it's such a big industry. It's a trillion-dollar industry. It's very complicated. And so people usually just stop there when you say, I'm in finance. They're like, okay, good. Person's in finance, that's it. But the thing about finance is that because it's so big, it's so complicated, there's so many ways that we can learn more about it, and we can break this down, because this is very important for us to understand what are all the different sectors in this huge financial ecosystem. There are a lot of different sectors, but I want to just show 9 different sectors. Currency as a medium of exchange, assets, where do you keep your assets, exchanges, lending and borrowing, derivatives, funds and portfolios, insurance, and beyond finance. So these are 9 different sectors that I want to introduce to you. And what I'm going to do is to compare the traditional finance world with the decentralized finance world. And that's what DeFi stands for, decentralized finance. In traditional finance and decentralized finance, in the finance ecosystem in general, you have so many more sectors. This is just a small little picture. This is just the tip of the iceberg. But we don't have a lot of time, and I don't want to overload you with too much information. So I'm just going to look at 9 different sectors, so you get to compare the different kind of sectors from the traditional finance world and the decentralized finance world, so you can make sense in your head. How do they work out, and how do they all come together in the financial piece? So let's get started with medium of exchange as currency. I don't want to use the word currency because in economics, currency has 3 different functions: medium of exchange, unit of account, and means of payment. Right here, I just want to focus very much on medium of exchange. So you exchange goods and services, or you trade, you exchange something. Currency is used as that. So in traditional finance, we're talking about USD, US dollars, British pounds, euros, Japanese yen, Chinese RMB, Swiss francs, Singapore dollars, Hong Kong dollars. These are the medium of exchange. We can see them in the day-to-day trading or day-to-day life. If you go and buy a cup of coffee, you go buy a bowl of noodles, you go buy a bowl of rice, you use currency as a medium of exchange. Here, let's talk a little bit higher level, balance of payments. So when 2 different countries trade with each other, they need to trade in something, right? If Singapore is going to buy oil from Kuwait, for instance, we're going to get oil, and we're not going to send them, rice or something. We're going to send them money, because that's a medium of exchange. That's how we exchange goods and services. So we can choose the different kind of currencies available, maybe USD or maybe Singapore dollars. It really depends on the two different countries. So that's traditional finance. We use them in balance of payments in between country and country trade, or we use them in a retail trade. So I go and buy coffee and I make payment with that. Very simple, very easy. You can imagine in general, it's about people and people trading. Now in decentralized finance, it's slightly different. I put Ethereum here, Ether here, ETH, which is quite controversial. Why? Because is Ethereum money or not? Well, yes and no. Remember I told you money or currency has 3 different functions? And I would say that Ether is used as a medium of exchange, but it's not used as a medium of exchange for peer-to-peer. So if I'm going to exchange something with someone else, I don't really use Ether. What the main focus on Ether is that when applications are built on Ethereum, the Ethereum network, they need to send data to each other to trade. So if, let's say, I want to trade my tokens on Uniswap, so it connects my wallet to Uniswap's account and they'll be trading, it's not me speaking to another person. It's not peer-to-peer. It's more application to application. So from that perspective, application to application perspective, that's where Ether comes in to trade and exchange data and information. So that's where the medium of exchange, that's why I really want to highlight medium of exchange over here, because it exchanges information and data between 2 applications. So if you think of it in the real world, you have the different underlying protocols, right? HTTPS, TCP/IP. And you have different things built on top of that. You have like Facebook or emails or Instagram or I don't know, defi.com or something. Then it transacts information. And that is not peer-to-peer. That's application to application. In the crypto space or the DeFi space, that's Ether being transacted. So that's ETH. WBTC is Rep BTC. So the thing about BTC and Ethereum is that they're two different stuff. They don't really interact with each other. So think of BTC, Bitcoin, as English speaking, and Ethereum as Chinese speaking. So let's say China. Now, Bitcoin, English speaking, can't go to China and speak English because everyone there speaks Chinese. So how do you do that then? How do you mitigate the difference? Well, you do that by having a translator. Translator will be stuff like WBTC, Rep BTC. What they do, they take BTC, the English speaking, they translate it to Chinese, and so now BTC can kind of exist on the Ethereum network. So how is that being done? You have BTC, they collateralize BTC, they change it to an ERC version of Rep BTC. So they mint a new version of BTC, and that can interact on the Ethereum network. So that's the translating from English to Mandarin part, because you can't use BTC directly on Ethereum, okay? And in the USDT, that's also the similar thing. You can't just take one US dollar note and say, oh, I want to spend this US dollar note on the Ethereum network. It doesn't really work like that. So you have USDT, which is Tether, and technically what they do is to put USDT, like a USD, in a bank, and from there, based on the bank's balance, they will mint the right amount, the equivalent amount of Tether, and that's USDT. So again, that's a translation. So let's say USD speaks German or Korean, and Ethereum speaks Chinese again. So USDT is the translator, so that now USDT is ERC20 and can interact in this Chinese-speaking Ethereum platform. So all these are the medium of exchange, so you can be exchanging between these platforms. Okay, that's the first sector. The second sector, there are assets. In traditional finance, you have this existing asset classes. You have stuff like equity, current FX, or like foreign exchange, bonds, derivatives, whatever. You have a lot of different asset classes. So with equity, it'd be stuff like your stocks and shares, like Tesla, Google, Apple, these kind of things that you hear all the time in financial news, like in Bloomberg and Financial Times. With bonds, you have things like your US Treasury, you have your sovereign bonds, you have your corporate bonds. These are traditional asset classes. Nothing new has been there for a long time. In DeFi, we have this new thing called crypto asset. Now, this is quite a new asset class because it's similar yet different from the existing asset classes. And right now, there's no formal definition of DeFi being a new asset classes or crypto asset being a new asset class. So this is still out there in the open. We're working very hard with regulators to understand a little bit more about this, but we're still far from defining it as a new asset class yet. So in DeFi, in crypto asset, we're talking about stuff like DAI, comp. So DAI is used in the MakerDAO ecosystem. Comp is used in the Compound ecosystem. Land is used in the Aave ecosystem. YFI is used in the Yuan Finance ecosystem. So new asset classes, or these are new crypto assets that are new in the space in the recent couple of years. And these are the different kind of assets available in crypto assets. Now, where do you keep these assets? Where do you keep your treasury bonds, your money, your currency, or where do you keep your Ether, your WBTC, USDT, DAI, COM, LAND, YFI? Where do you keep them? In traditional finance, you have your traditional banks, like your Bank of America, HSBC, Standard Chartered. You open a bank account with them, they do know your customers, they do some background check on you. You have a bank account, and then you can be spending money based on that. That's how you have credit, you have debit cards, that's how you be spending money. You can go to an ATM and withdraw money. That's where you keep your money. In the traditional finance space, there's also fintech banks, stuff like your Monzo, your Revolut, Google Pay, Apple Pay, Facebook Pay, all the whatever kind of pays available. So those are the different ways to keep your assets in traditional finance. What about DeFi? In DeFi, you don't really have banks, but in DeFi, you have wallets. So wallets would be stuff like My Ether wallet, MetaMask, Ledger, Trezor. There's so many wallets in the space, and the wallets are also dependent on what's your layer one protocol. So if it's a Bitcoin, if it's the asset is on Bitcoin versus the asset is on Ethereum versus the asset is on Cardano versus the asset is on EOS. All the different layer 1 protocols have slightly different wallets. Some wallets could interrupt between the different layer 1 protocols, but they can be very different wallets available. And then we have exchanges. What are exchanges for? Exchanges, as you can imagine, exchange, right? You can exchange between different people. So you're essentially trading. In traditional finance, you have things like your NASDAQ, your London Stock Exchange, your New York Stock Exchange, your Shanghai Stock Exchange. So these are different stock exchanges available to be trading assets with different people. In the crypto space, in the decentralized finance space, we have decentralized exchanges. So in traditional finance, all these stock exchanges are owned by someone. And in decentralized finance, it's not owned by anyone. It's owned by the community. So you have things like Uniswap, Bancor, Curve. And these exchanges are very interesting because instead of a counterparty to be trading with and an order book, it's all done with math. And it's done quite beautifully. Now, we have assets, we have currencies, we have banks and wallets to keep all these stuff. We can exchange with people, we can trade. But one of the biggest, very important thing is to lend and borrow. We lend and borrow money. We go to the bank, we borrow money, or we lend out to your friend, and lending and borrowing, it's very important. So in traditional finance, we have the banks to do that, right? We have Citibank and HSBC. You can borrow via credit card. So if you are over your limit, you're technically borrowing from the bank, or borrowing and lending can come from a higher level, institutional level. So instead of funding your company with equity funding, you fund it with debt financing. So that could be an option. So that's lending and borrowing. In the fintech space, so still in traditional finance, but in fintech specifically, we have Monzo. Stuff like Monzo. I know Monzo has borrowing and lending. Monzo has borrowing because you can do overdraft. And I'm pretty sure there are other fintech banks that do that as well. Now, in the DeFi space, instead of just call it borrowing and lending, we call them lending protocols. Protocol because these are, instead of done by this banker signing and approving, checking your background and everything and said, okay, you can borrow this amount of money. These are done by machines, protocols. So we have stuff like Aave, Maker, Compound. We're very lucky to have Maker with us today, who will be introducing Maker to us, and DAI. DAI is a very important asset in this whole lending and borrowing space. And later they will be sharing a little bit more about that. So the first 5 of them are, in general, that's what you think about finance. You have money, you have assets, you have banks, you have exchanges, you have borrowing and lending. Very simple, very, very easy. Now let's get a little bit more complicated. Let's understand a little bit more about what else is there under this entire financial space. One of the things that was a lot of money. It's like a few hundred times in market cap, more than the borrowing and lending market, is this thing called derivatives. So derivatives are financial assets. So the cool thing about derivatives is that you get to have exposure to these assets without owning them physically. So basically, you have more exposure to these kind of opportunities. And that's why derivatives are so interesting. In traditional finance, we have a lot of different types of derivatives. Futures contract, forward contract, interest rate swaps, options, structured notes, variance swaps. And these are just some of the derivatives. Derivatives are cool because you get to structure them, and they're quite flexible. So you can structure them in a lot of different ways you want, based on what you want the derivatives to do. You want them to hedge your risk. You want them to increase your exposure. You want them to increase exposure to event A or increase exposure to event B. You want to be betting for or against a specific security of a specific asset. You can use derivatives to do that. And that's why derivatives is such a big market, because it's very powerful. And in DeFi, we also have derivatives, and they're also very interesting. So some of the projects that are dealing with derivatives will be Synthetic, Opyn, OPYN. I don't really know how to pronounce that. We have Hedgic, we have FTX, we have UMA. So in the DeFi space, we have things like binary option, we have futures option, we have futures contract, we have variance swaps. We get to long and short different assets. So you can long BTC, you can short BTC, you can long a basket of goods, or you can short a basket of DeFi goods. So there are a lot of different ways available to play around with derivatives, be it traditional derivatives or DeFi derivatives. But I do have to caution that this is quite a risky thing. It's not super easy to understand because it's very complicated. And it's very important for you to understand the risk before going into the DeFi space, especially the derivative space. The other thing that I want to talk about is funds and portfolio. These are things that are available in the space out there. And usually funds and portfolios, imagine them to be a basket. So if you go for a picnic, you want to bring a few things, right? So you have a picnic basket, and inside you could have cheese and bread and apples and grapes and ham. So you have a basket of them. And based on that, people will be trading the basket instead, the picnic basket. So let's say you have one picnic basket is for vegetarian, one picnic basket is for meat eaters, one picnic basket is for people with kids. So you have different types of baskets, and people will be trading the baskets instead. Because people are lazy. They don't want to go to the supermarket and say that I want to buy this. They just say, okay, your basket looks nice. We're all vegetarian, so we're going to get the vegetarian basket. So that's the concept of funds and portfolio. In traditional finance, we have things like ETF, exchange traded funds. So this basket can be traded on a stock exchange. Remember we talked about exchanges, the New York Stock Exchange, NASDAQ, the London Stock Exchange. Yeah, so your picnic basket can be traded over there. We have mutual funds, we have hedge funds, we have municipal funds. We have a lot of different funds available. And then you can have funds of funds. So you can have a fund of various hedge funds on there. You can have a mutual fund with various funds on there. You can even do derivatives funds. So you can do a synthetic hedge fund of a specific sets of companies in the US when you're based in Singapore. So there are a lot of fun ways to be playing around with this, and it can get really, really complicated. But let's not go so far, okay? Let's come back to the ground. Let's come back to the decentralized portfolio space. In decentralized portfolio, you have stuff like PiDAO, you have stuff like Balancer. So PiDAO is kind of like an ETF. People choose and pick assets to put it in this basket. Balancer is also similar. The thing is, I've put these different assets in one of these boxes, one of these 9 sectors and boxes over here, right? The reality is that these boxes, they don't have to just be in one box. So Balancer can be in a funds portfolio box. They can also be in the exchanges box. So these boxes are quite fluid. And one of these projects can be in multiple boxes. Then we also have insurance. So insurance is a big, big industry. In traditional finance, insurance is one of the oldest industries in the world. It's worth so much money. And insurance is one of the, it's one of the oldest industries in the world. Back in the day, where you have a lot of farmers, everyone is a farmer, everyone has a plot of land, insurance was basically all these little farmers come together to pool the money together into a pool. So if my farm gets burned down, I get insurance through this pool, and everyone will chip in, or I take money from that pool that we all share, and so I can cover my loss. But if someone else's farm is burned down, then they can also take some of my money to be covering them. So we're just insuring each other. So that's how insurance started. It was a very P2P thing. And then, you know, how market inefficiencies are there, and we have a lot of coordination in place, and economics comes into place, and big insurance companies come together to aggregate all these risks. And then you have big companies like AIG, AXA, Ping An, Aviva, Prudential. So you have big insurance people, traditional financial insurance companies in the space today. In the DeFi space, though, insurance is still relatively new. The thing about insurance is that it's quite complicated. The amount of econometrics that goes in, the amount of math that goes in, economics math that goes in, it's very complicated. Even I do not like it. I'd like to speak some math, but that's really math, because you're pricing risk, and you're looking at what are the different risks available and then pricing them. So it's not very easy. So it can get quite complicated. So decentralized finance is still relatively new in the DeFi space, but it's growing. And I think it will grow to be quite big. Right now, we've got 2 big ones. The first one is Nexus Mutual, and they are doing insurance for the DeFi space, for financial assets. We have EtherRisk, which is doing insurance for the flights industry, which I don't think it's going to be very big right now because there are no flights going on anyway. So that's all the financial stuff. Now, the thing about finance is that it doesn't just exist within finance. Unfortunately, money makes the world go round, and you need finance in a lot of different sectors in life. So there's a lot of these use cases beyond finance, still related to finance, a tangent of traditional finance or a tangent of finance. So in traditional finance, we have things like art or betting markets. I won't use the word gambling because that's illegal in a lot of places. So I'm going to use the word betting markets. We also have these kind of stuff in the DeFi space. We have things called NFTs, so non-fungible tokens. So I think non-fungible tokens are very exciting, it's going to be one of the next big things in crypto. And we're bringing NFTs with DeFi coming together to be looking at how can we interact with them, because NFTs have their own community on their own. DeFi has their own community. And when we interact them together, you've got these two communities coming together, which is very exciting and super powerful. So for example, we have Aavegotchi. And we're very lucky today because we have Aavegotchi coming later to be talking about Aavegotchi, which is a very exciting project. We have Rabbits, and we have things like The Art is Always on Sale by Simon. These are very interesting ways of playing around with NFTs, taking into some concepts of finance and DeFi. For betting markets and finance, or DeFi, we have Augur, we have Gnosis. So what I've shared right now is a very high-level overview of all these different depths available in the ecosystem, in the DeFi ecosystem. The thing about traditional finance, as I've shown you all around, is that it is still centralized at the top. You have one big bank doing all these different things. You have one big bank doing lending and borrowing, doing derivatives, doing funds. You have stuff like you have a lot of these big banks keeping your assets, doing the whole medium of exchange things, having your assets, having your borrowing, lending, doing derivatives, doing some form of insurance, keeping all these funds and portfolios, creating all these ETFs, and they have a lot of power. And what we want to do right now is to decentralize this power. How do we do that? We have all these dApps and applications and protocols that I've shown. And they're basically little building blocks, Lego blocks. And what you want to do is to take them together and build upon each other to see what kind of structures and skyscrapers you want to build, which is very interesting. So for example, you can have stuff like you have a currency, which is a medium of exchange. You put it on an exchange to get an asset. You keep this asset in your wallet, or you can put half of the asset in borrowing and lending, so you can be earning some interest rates. You can put the other half in derivatives because you want to have different kind of exposure. Because you have different exposure, you also have insurance to hedge against your exposure. And then you could be buying into some form of funds and portfolio, of which inside they have some NFTs in there, they have some betting markets, token assets in there, or they have other kind of assets and other assets that's in place in your funds so that you get exposure. So these are just building blocks all coming together and making the entire space very interesting and exciting. And we're just starting right now. So it seems very complicated. It's very complicated, and I understand that because finance on its own is also very complicated. What we're doing is to take traditional finance into the blockchain world or into the digital world. And in this process, we have to understand what was in the space before so that we can replicate them in the digital space, and what are the inefficiencies in the traditional finance space so that we don't bring the inefficiencies with us. And how can we reduce these inefficiencies? So if you're interested in more content like that, feel free to go to my YouTube channel. There are a lot of free content available and very nerdy ones if that's something that you're interested in. It's youtube.com/c/economics design. And with that, that's it. I am going to stop this. Yes, and that's it. Let me see if I can ask some questions. Are there some questions? Okay, is there a missing link for DeFi adoption? So I think we're running a little bit late on time, and maybe you can come back later. First, let's get Jesse, which is from Aavegotchi online, so that he can be sharing, and then we'll do some Q&A later, okay? So let me introduce you to Jesse. Jesse is the co-founder of Aavegotchi. Do you know when you were young, you had Tamagotchi, like this digital character, and you'll be feeding them and playing with them? So now we've grown up, right? Now we've grown up, we don't play with Tamagotchi anymore. But what we can do instead is that we can still play all these games, but we can be earning money at the same time. So we're taking DeFi and NFT adding together, and this is a very powerful thing called Aavegotchi. And we have Jesse with us to be talking about that.
Hi guys, can you hear me? Nice and clear? All right. So let me see if I can share screen here. I'm not super familiar, but I know there's a way. Share. let me, oh no, that's sharing it with the whole world. So sorry guys, give me 1 second here. Oh, there we go. I'm going to share screen. And yeah, we're talking about NFTs. So if you guys are familiar with non-fungible tokens, then you probably think of the first one that always comes to mind is CryptoKitties. But really that was the dawn of NFTs a couple years ago when it kind of famously froze the Ethereum blockchain when it got so viral. Since then, there's been a lot of NFT activity, and it's really spawned into a kind of ecosystem or niche of its own within the blockchain space. So some of my favorite parts of NFTs are nothing to do with things like cats and crypto, but actually like art. So there's the crypto art scene where you're actually taking, instead of a Bitcoin, which is fungible, your Bitcoin's worth the same as my Bitcoin, you have a piece of artwork tokenized and I have a different piece of artwork tokenized, and they could have totally different values. So that's pretty cool. That's a kind of different type of experience you can have by creating non-fungible items on the blockchain. And usually you get these values from things like their scarcity. You can prove that there's only one copy of your artwork. And sometimes people say, oh, well, I can just download that same GIF or that same image. And really they haven't thought it through yet, because you could also take a picture of the Mona Lisa off of Google image search, but of course it's not nearly as valuable as the real Mona Lisa. So ownership and proof of ownership is really what blockchains are all about. So it's a very cool application. And I've been working in the space with NFTs for the last 2.5 years. I co-founded Mintable, which is like the first place you could go online and you could take your MetaMask and you could mint your own NFT. You could basically take any image on your computer and then tokenize it with all sorts of metadata included in that token to prove, you know, it is the one that was made at that time, and pass them from wallet to wallet. So that's the scarcity aspect. There's also a lot of excitement with the ecosystem side. There's places like what they call metaverses. So maybe you've heard of Decentraland. There's also crypto voxels, which is really cool because it's a bit more like Minecraft. And the advantage that one offers is it's super user friendly. You can just share a hyperlink to an address on Twitter or in your favorite chat room. People can click on it, and right there in their browser, even on their phone, it doesn't matter if they have an account or not, they're just dropped into the metaverse. Suddenly they're exploring this 3D world, and the property in these worlds are actually tokenized parcels. So you actually have virtual property for the first time in history. You can actually prove who owns which piece of virtual land. And it takes video gaming to a whole nother level. And that's something I'm working on now. I'm going to share here in a minute. But the third part of the value comes from the community itself, because you could do all that, and if there's no community, then you really won't have much value, right? So these are the things most people think about when they think about a non-fungible token having value. But we're going to tie it into DeFi today, because we think about, this is a question I pondered after Mintable. I was working on Mintable, and I was also a part of DigixDAO, which is a gold stablecoin company. And I was thinking, you know, that project's really interesting, but the gold stablecoins are nothing like my real life world gold coin collection, because there I have a little bag of coins and I can look at each one. They're unique. They have a story. I don't get that with a stablecoin. And I was like, oh my gosh, what if I could take the NFTs I'm minting, create a special contract with an escrow where you put stablecoins, and those stablecoins are tied to a specific NFT. And then you would be able to bake the value on chain into a specific non-fungible token. And so what came out of that is our first project, which was called BullionX. And you can go to bullionx.io and see exactly what you see here on the screen. They are 3D digital collectibles, provably rare. And the cool part is, to mint them, you have to stake DGX gold tokens into the NFTs, specific amounts. So maybe the gold coin you see here is a 5-gram gold coin. 1 DGX is equal to 1 gram of gold. You would actually need to take 5 DGX and stake it into the smart contract, into the escrow, in order to mint this rare coin. And most of the BullionX, you know, they're very rare. There's only like 5 or 10 of them in existence. Some of them are super special. They're one of one. Some of them were designed and made by myself and my team. The other half are made in collaboration with some of the crypto artists that are coming up in the space that I mentioned earlier. So Twitter is a great place to discover a lot of cool crypto artists. And some of them you can discover by visiting BullionX and seeing them trying their hand at making and reimagining what gold coins and coin collecting could look like in the future. So yeah, kind of repeating myself here, the idea is that you get intrinsically valued non-fungible tokens. And if you ever want out, there is a full system. You're able to melt your gold coin, and the act of melting it or burning it on the network completely destroys it forever, but you'll get the staked amount that's in that escrow contract returned to you. So you would get 5 DGX back if you melted your 5-gram gold bullion X. Now, what I really want to talk about is that's kind of like DeFi, the gold, but it's kind of DeFi light. Real DeFi is more like what Lisa was talking about in terms of derivatives and all sorts of creative financial products that you're able to create. And so after we built BullionX, and that, to be honest, it continues. We're working on BullionX, but we continued and we thought, man, there is so many things we could do with value staked non-fungible tokens. And so we started playing out some of these ideas, and really the most exciting one was working with DeFi. And because you start getting yield and interest earned, and you could do all sorts of interesting things as far as gamifying this value that's accruing. You could do all sorts of different things with this value. So the team, we started really thinking about what else we could do, and the project from Aave, one of the biggest DeFi projects there is, the team Aave has all these ERC20 tokens called A tokens. And they look and feel like all the popular tokens you already hold. For example, Chainlink's Link coin, but instead of a handle being capital L-I-N-K, it's a lowercase a and then Link. So it's A-Link. Or the stable coins like AUSDC. And why do they do this? Because the A tokens actually will accrue interest natively. You don't have to do anything or interact with a dApp, but just by holding the A-Link instead of the normal link, you had 1,000 A-Link in your MetaMask wallet yesterday. Maybe today you have 1,001. It's just naturally increasing in amounts inside your crypto wallets. So that's like very interesting for us. We were like, if we can stake these A tokens inside NFT, what could we do with it? And Aave's mascot is a ghost. And we went out to Aave, and they actually really liked the idea and were very supportive from the start. So they said, okay, go ahead and see what you can build as far as a demo, and maybe we can support you along the way. And so we came back a few weeks later with Aavegotchi, and it's pixelated, fun artwork kind of presentation. And some of the ideas are you're playing with your DeFi, you're playing with your interest earned, and we're also kind of making what is usually a very intimidating subject. DeFi can be quite intimidating. We're making it very fun and approachable. So it's a great way to combine DeFi and non-fungible tokens. And we're going to launch with these Aavegotchi on the mainnet Ethereum in December. And what you can see here is the first Aavegotchi. What he's got on here, you'll notice his eyes are covered by a kind of Star Trek looking headset. That's a wearable. So if you get into like NFTs, you'll quickly learn that in Decentraland or some of these metaverses, you have your main character, and then you're able to own digital assets that can decorate your avatar. So they're called wearables. And so you're going to be able to not only have a non-fungible collectible Aavegotchi that you can feed A tokens to, you can stake A tokens to him almost like a digital piggy bank, but you also are going to have wearables that are also of different sets of rarity, and you're going to be able to take these rare traits and actually gamify them and participate in all sorts of mini games. And the chances of you winning or being a favorite or an underdog are directly tied to the personality traits of your particular Aavegotchi. So every Aavegotchi has a unique set of traits. The way you discover yours is that you're going to buy an NFT that looks like this, and it's called a portal. So you're going to buy a portal, and I guess I could make my screen bigger for you guys. I'm sorry. Let's take a look here. You get the portal, and you'll use our Ghost token, the native ecosystem eco governance token, to do that. You get the portal, and then what happens is we actually engage with Chainlink's VRF, which is a randomizer smart contract. It's an oracle that determines provably how random some results are. And what it's going to do is you're going to buy your portal almost like a deck of cards. Then you're going to open your portal and 10 Aavegotchi are going to appear. They're all totally randomly figured out according to the Oracle. And then what happens is you choose the one that you want to summon. You can only summon one Aavegotchi through that particular portal. And so you look at them, you decide who you really want to summon. And to do that, you stake one of the A tokens. So in this case, you can see a chain link, an A link Aavegotchi, and you're going to stake A link particular amounts depending on his rarity level into him. And then he will be summoned through the portal and he's yours to train with, vote in the DAO with, or play mini games with. And doing all those different actions are actually going to earn him XP points, just like a role-playing game, because we think that that Web3 is basically one big MMORPG. So these are your avatars that are going to live with you and grow with you and actually evolve throughout the Web3 experience over the coming years. And so while they're doing that, they're accruing interest with the DeFi. Some of the mini games, you're going to actually be able to take the yield that you've earned and compete with it. There'll be like different weight classes. There'll be different, almost like different competitions where you could win or lose yield. So it's quite exciting in that way. Right here, I just introduced kind of how it's different from some other NFT projects that really you should be familiar with all of them. They're all fantastic. There's BullionX, our own, so we're fans. But CryptoKitties, the original, and what Avastars did is they were the first ones to figure out how to take really small, efficient file sizes and host them permanently on the Ethereum blockchain. Because usually a blockchain is not very good at being a cloud service for storage. But they're able to take really light SVG files and create their images there. We've taken that concept and what they kind of pioneered, and we are doing something similar, even dare I say a little more efficient, so that all the Aavegotchis are living forever on the blockchain. If there's no Amazon server that's going to go down and suddenly you lose all the visual data. Nope, everything is stored on the blockchain, and we're super excited about that. We're also excited about the DAO governance because unlike other NFT projects, they haven't really embraced the idea of a community deciding what to do with the development and the roadmap. So right now we have an awesome community that is coming together for the last month, and mostly Discord channels and Telegram as well. And they are already debating proposals and figuring out what they can do to figure out where we want the game to go. So we as the core team are kind of guiding it through the first DAO 1.0, but through this ghost token that is a governance token for the whole ecosystem, people will be able to do everything as we go. In fact, it's going to be the first DAO that has not just a boring UI, but actually has a metaverse where you go and you vote in real time in like an events-based DAO where you go into like a video game and you actually cast your votes. So we have a lot in store in that department. That's why people are so excited about it. We're basically bringing together NFT nerds, the DeFi degens, and the governance-obsessed DAOists. So tonight's quite a special night for me because we are actually commencing the summoning tonight. We are summoning the DAO by launching a token bonding curve for the GHST token about 2 hours from now. So it's quite an exciting night, and the community is pretty much on fire and ready to get started with governing and making proposals and getting ready for the December mainnet launch of Aavegotchi. So with that said, I'll wrap up here, and then I will, if we have time, I'll take a few questions. So let me see if I can stop sharing the screen.
Yes, please. There are a lot of questions for you, Jesse.
Are there? Okay, I'm coming back over from the screen sharing. Click to close. Yeah, I really don't know how to stop sharing the screen.
It's okay. I'll just put you as focus.
Okay.
Ta-da.
Oh, there we go.
All right. So if you go to ask a question below, stuff for you.
Cool. I see a few from here. Avalon says, would you agree that without DeFi, NFTs are headed for death? No, I think that would be NFTs were doing fine before DeFi. I think they'll do fine after. But I think it's fair to say that the type of projects that, like, especially my team's working on, we would not be able to build Aavegotchi without DeFi. So without the Aave A tokens accruing interest, for sure we would lose a lot of the most interesting aspects that originally inspired us to make this project. Being able to play with yield and basically gamify a digital piggy bank has a lot of things there that couldn't be done without the DeFi aspect. So good question.
So there's one that's to Aavegotchi. How is Aavegotchi related to Aave's protocol and features like flash loan and credit delegation?
Right. So the initial use case is the A tokens themselves, because it's so user friendly. You don't really have to do anything with the Aave platform itself. You don't have to go to the Aave dashboard or anything. But what you do have to do is to play our game, you're going to have to get some A tokens. So it could be A DAI, it could be A Link, A USDT, any of those. And you're going to need kind of a collection of those, because you probably don't want just one Aavegotchi. The mini games kind of, you benefit by having a collection. So you're going to want to own a little bit of each A token, so to speak. There are some other things we're looking at as far as using other types of interest-bearing tokens outside of the Aave ecosystem, but initially there's so much to do just with Aave, and we'll probably work a little bit more on that front for the foreseeable future. Yeah, DeFi degens. I see Du's comment. That's right.
What's the relationship between Ghost and Lend? When will Aave officially announce this?
Okay, so we are an independent team separate from Aave. We're the Aavegotchi team. The team's actually called Pixelcraft Studios. And so we're announced. We're going to have the token bonding curve tonight. There's about 2,000 people in our Discord that are excited and ready for that. You can check it out and read more on our Medium blogs or Twitter. The Aave team is not directly involved, but very supportive. So like I say, they've been with us from the beginning. They actually funded us with a funding grant to explore Aavegotchi and whether it was a feasible idea. And after, like I say, about a month of working through that and the milestones, we basically got the green light that we knew this was something quite special. Sean, I see you. Sean, I know Sean. Good to see you, Sean. Yep, Aave A tokens. They're really just an awesome tool for NFTs to blend with as far as value staked NFTs. The last thing I guess I could say to wrap up is just that I think there's going to be a lot more of these value staked NFTs or intrinsic valued NFTs down the road. You're going to see, we're really the only team that's been obsessed with value staked NFTs. Over this last year, you've seen us release BullionX and now Aavegotchi, but it's proven itself to be such a useful thing because you get a kind of foundational level of whatever ERC20 is staked inside, plus the speculative nature of collectibles. So you kind of get exposure to both worlds at the same time. And I'm sure there's going to be a lot of other teams and interesting projects that are going to see what we're doing and are maybe already working on things like this.
Thank you very much, Jesse.
Thank you.
All right, let's have the next person in the space. If you don't know them, you should definitely know them. They're MakerDAO, and MakerDAO has two different kind of tokens. You have MKR and DAI. DAI is used in almost every other project that you've heard in the DeFi space, and we're very lucky to have Wan Nam with us. He's the APAC Business Director of the Maker Foundation. So previously worked as a blockchain analyst at Gifto, a senior analyst at Proofsuite, and held positions in various think tanks. Welcome, Du.
Oh, yes. Well, thank you for inviting. Can you guys hear me well? All right. I'm going to start with sharing screen. Give me a second. All right. Okay. All right. Can you guys see the screen well? Okay, I cannot read the comments from here, but I assume the screen is working fine. If not, let me know.
It's working fine. You can go.
Okay, sounds good. Yeah, so my name is Du. I'm in charge of Asia Partnership for Maker Foundation. Do want to clarify that I'm from the Maker Foundation. So MakerDAO is that's run by the governance and the community. We're the just ones that help to bootstrap the initial DAO. Now, for MakerDAO, especially within the DeFi space, is pretty well known. So I'm pretty sure that you guys are familiar with how Maker works, as well as like CDP or Vault. So I'm not gonna go too much detail into like a background on DeFi. I will discuss about how like Maker system works, and I will spend more time getting questions from you guys. I'm pretty sure that many of you guys are curious about where Maker Foundation as well as MakerDAO is heading, as well as some other potential concerns or suggestions, things like that. So to describe Maker, we do want to talk about DeFi briefly, as many others already mentioned, and then talk about DAI, and then our monetary system, as well as real-world use cases, and also accept some questions. And I'm going to go through them pretty quickly because many of you guys are already pretty familiar with many of the things that I'm going to say. So the thing about DeFi is that we all know that it's transparent and also decentralized and open for everyone. And then we talk about how DeFi is so strong. Now, there are many people who might be like, okay, DeFi is just a scam, it's speculative. But what we also realize is that DeFi has potential, and it's already helping many people around the world to access finance that are usually hindered by other corruption or inaccess, things like that, right? So you don't need a bank account to actually access this. You just need your personal account, which means that you just need internet and everyone can access it. So let's go through it. So DeFi space has been growing very rapidly. Many others also describe about DeFi space overall. So I'm not gonna talk too much about it, but basically we are seeing very rapid growth for it. I think that just this year we are cheering when it hit 1 billion, but now it's going over 9 billion. It went down a little bit, but now it's going back up. I'm pretty sure that we're going to hit at least 10 billion this year, even probably more. And then we see that there are many different participants in the space. So just a few months ago, the space itself was dominated mainly by like Maker or like Compound or Aave, but now we have many new participants, such as Car Finance and many others. So we're seeing even newer participants as well. So this one is based on September, but if you check again, and then also look at some different tractors, then you also want to see some new contenders like, let's say, SushiSwap and teams like that. So we're definitely seeing this DeFi space becoming more diverse. Now, so in this decentralization, we talk about free and open system, but then we also think about, okay, so how do those business and industries and those people work? But a lot of times people also don't think about, okay, so if you're looking at this, our current economy, what is very important, right? And then we look at the current economy, what we realize is that it's not just about trading, but it's also about like people having stable medium for exchange. Actually, let me close this one. So that's where like DAI plays in. So we like to talk about how the DeFi space is money level, right? So there's Ethereum as a base layer, but there's also a DAI and then many others that use it, and then also some other services that serve it. For example, InstaDF itself can help between Maker and Compound, and then you have other services that build on it. And we're definitely also seeing more new services such as like wallets, as well as trackers, things like that, or like aggregators. Okay. Right. So what is Maker building? Okay, so Maker is trying to build DAI stablecoin, right? So this allows people who do not have access to legacy finance, especially like more traditional finance, to access this global financial system. And then I'm going to explain more here, but this is how. So one of the biggest nonprofit, Oxfam, also use DAI for its services to try to help people around the world. I'm going to discuss it more later as well. So once again, stablecoin is needed, especially for mainstream adoption of cryptocurrencies. If you think about more like traditional finance as well, like we do a lot of, let's say, trading or finance or buying and selling, or just like saving, we really rely on our fiat money, right? So we rely on the stable value. And then within cryptocurrency, because a lot of cryptocurrencies, including Ethereum, are very volatile, it is important to use stablecoin. And out of those stablecoin, DAI is the decentralized one. So especially within DeFi space, we like to use it. Now to describe, before that, you used to be called Psi, and then it's soft pegged to US dollar, and then right now there are many different asset types that are backing it. So for Psi, it was only Ethereum, but for DAI, we have now only Ethereum, WBTC, right now even USDC, and many others that are coming up. And then it's not just used in cryptocurrency, it's also used outside cryptocurrency this field as well. So for example, UNICEF, Oxfam, many different ways use it. And then as the name MakerDAO suggests, it is governed by DAO. And then it helps to really expand the DeFi system as well. So to describe about the DAI stablecoin system, as many are probably familiar, we have what previously called CDP, now we call it vault. Basically meaning that you have your cryptocurrency as collateral to mint it. To describe to more legacy finance, it would be like having, let's say, your real estate as collateral to borrow money. Now, a lot of people ask about, okay, why would anybody do this kind of overcollateralized loan, right? They're like, okay, like if you, let's say, want to turn it into money, why don't you just sell it, instead of like minting it? Well, because sometimes you want to maintain the exposure to underlying asset. So if you go back to, let's say, real estate, if you believe that, let's say, there's this building and then you believe that it's going to go 10x like next year, right? It's a very, has a lot of potential, but you need money right now. Well, then are you going to sell your building just to get this money? Probably not. What you're going to do is that you're going to put it as a collateral and then borrow money, right? MakerDAO system is very similar. So for example, there are a lot of people who are very optimistic about Ethereum, but let's say they need some money, then they can have Ethereum as collateral and to mint DAI. We actually had some people in Korea where they actually use Ethereum as collateral to mint DAI to buy real buildings and real estate. We also have some people who buy cars and others. So we actually see those that just not just remain in the cryptocurrency, but also transfer over to reward as well. And also some people use it for leverage as well. So for example, you can have Ethereum as collateral, mint DAI, use the DAI to buy more Ethereum, right? Basically, you're leveraging yourself in more decentralized manner. Yes, like I described, so there's a vault, you have cryptocurrency as collateral, and you mint DAI, and then so several risk parameters as well as governance. For example, like stability fee is decided by maker holders, and then those help to maintain the price of the DAI to $1, and then DAI can be used for many different things. And then especially it's focusing on people who do not have access to finance. And then there are also many different innovations they're trying to really expand it. Because, for example, there's a lot of concern about gas fee, as well as concern about people who are not familiar with blockchain. And that's where some of those innovations, as well as partners, come in. Like, for example, there are wallet companies like Argent, which allow people who are not familiar with cryptocurrency to access it easier. And they used to subsidize gas fee as well. And then there are also many other solutions, whether it's layer 2 others, they're trying to make it faster and also easier for users as well. So we're definitely seeing many different cases and innovations to try to make it more accessible, especially for those who do not have access to finance. So once again, this is describing more, but in here I do want to also talk about DSR, which right now it's 0%. So, but once it's activated, what you can do is that you can put DAI, and then you can stake it to get rewards. So if, let's say, DSR is 5%, if you put 100 DAI after a year, then you will get 105 DAI. So you can imagine that this can work as similar to savings account for people. And then this also means that many people who do not have access to such saving account can easily access it as well. Yep, so we are actually seeing a lot of people and also a lot of partners using DAI. And once again, this is not just within DeFi. We are also seeing it, for example, like a blockchain gaming, like X Infinity, as well as global organizations like UNICEF and many others. So we're seeing more integrations as well as high DAI transaction. This one is up to July, but if you expand more, then we're definitely going to see actually more as well. And then, for example, we talk about Oxfam case, but not only this, we're seeing a lot of cases where people try DAI because it's decentralized as well as transparent. So we're definitely going to see more cases like this as well. So, yep, DeFi, once again, we're trying to provide economic empowerment as well as access for more. And then for today, I made it very short because I assume that a lot of you guys are familiar with the Maker system. But if you guys have any questions, you can also email me at do.maker.com. You can also track me on Twitter as well. So I think for the rest of time, I'm gonna use it for answering questions. If you guys have any.
Thank you, Du. We have 2 questions here now. The first one is that DeFi is creating a lot of competitors for MKR, which is the first mover. What is the plan moving forward?
Okay, so DeFi. So I think that it's a really different way to look at competitor, right? Because MakerDAO system itself has many different services. I think that in large part we can describe it to 3 parts, right? So Maker system itself is made of DAI, stablecoin, right? So decentralized stablecoin space, and then there's a lending part, right? So you basically have cryptocurrency as collateral to borrow, right? So that's a little bit more close to, I guess, Compound or Aave. And then you have savings part, which, Aava, or I guess more recent projects like YR, I think Wi-Fi kind of can play into it. So that's a very interesting question. I will say that in terms of decentralized stablecoin, we're definitely seeing a lot of interesting innovations happening, right? For example, Synthetics or Synthetic USD. I know in Korea there's also Terra, which is pegged to Korean won, as well as many other interesting innovations that are happening. And then from Maker's perspective, DAI has been tested for a long time. For those who remember, even DAI was DAI, it was called Psy now. So back then we went through Ethereum price crashing down more than 70%, right? So we went through a lot of volatility, and now we're in a situation where there's a high demand for yield farming. So DAI's advantage has been that it went through a lot of different stress tests, and then still managed to hold. Yes, it was not perfect. I mean, we have to admit, but it's improving, and also the governance has been also in place for a long time. For a lot of different other decentralized stablecoins, especially newer ones, it's not really tested yet. So I think that in terms of that, DAI has been more tested, as well as that it's been integrated more. So whether that's exchanges or other services, like for example, or global entities like UNICEF, DAI has been integrated more. So it allows people to access it more easily. In terms of other ones, I don't want to go into too much details, but in terms of lending, Maker system is very different, right? Because for others, they're more flexible. For example, Aave, they usually allow many different collaterals. For even newer ones like Cream.Finance, I realized that they even support a little bit, might be riskier, but newer collateral. For Maker process, it's always slower, but at the same time, it also does a lot of risk analysis as well. So I think that for Maker system, it's different, and also reward part is also different as well. Because for, let's say, systems like Aave or Compound, you're basically putting in a pool and then people borrow, right? So in extreme case, there might be a case where people borrow so much that people who want to withdraw, they cannot withdraw anymore. For a Maker system, for DSR, that doesn't happen because we're not lending out to people for interest, right? That's also a reason why DSR rates has been lower than, let's say, Compound or Aave. But then that also means that in extreme situation like this, we can prevent it. So I would say that that was kind of a long answer, but I guess short answer is that Maker system has been tested more, and also the system is in a way conservative, but at the same time, it's trying to reduce risk, right, as much as possible.
Thank you. And we have one more question. It is, what do you feel about the congestion on the blockchain? It will affect Maker in the long run too. So what do you think about it moving forward?
Yes, that's a very good question as well. So as I kind of briefly mentioned in my slide, especially for accessing people in, let's say, low-income countries or countries that don't have really access to finance, right? So for those people, especially gas fee is very high. So for them, it really hits them very hard. That's also why we've been working with many different partners that can really try to solve it. So I briefly mentioned Argent, who used to subsidize a lot of this gas fee, as well as access to those DeFi protocols. And then we also, there are also many different layer 2 solutions that has been trying to work with DAI. So for example, XDAI is one of them, Matic and many others, they've been also working on as well. So I think that it's not just Maker. I think that the Ethereum community overall, as well as DFs, are very concerned about gas fee and the speed. But at the same time, there have been many innovative solutions, and then there are probably more that's coming, as well as E2.0, if it ever actually comes around. So, but yeah. So once again, we are waiting for many different innovations, but already a lot of innovation is happening. It's just that I think that right now is still a test phase, right? People are trying to see how much scale we can have, as well as how many DFs like move there or at least use it together.
Oh, this is a very good question. Any thoughts on stable credit, which Andre Conje from YFI proposed, which could bypass Maker? So it could be a very, very big competitor to Maker.
Yeah. So one thing I realized, at least reading through Twitter, is that I'm not going to say that I'm smarter than Andre. So my IQ cannot understand what they're actually proposing too well. I tried to understand it, but then I also saw that they released the code. I tried to talk with others about it, but then I think that we kind of have to wait and see how it launches to better understand it, or I need to try it, right? I do think it is pretty interesting, and I think this also goes back to the original question, right? So the first question was regarding, okay, there are many different Maker competitors, how can you compete with it? And I would say that there have been many different decentralized stablecoins. And then I assume that this will be also kind of next step in decentralized, stablecoin. Will be exciting to see how it comes out. And the interesting about Maker system is that even if it's let's say stablecoin, that's better than let's say DAI. Right? I mean, better is a very subjective term, but let's say it does its purpose better. It can be actually used as collateral within our system. So for example, USDC is already used in our system, POX as well. TradeUSD was proposed as well. So things like that. So I wouldn't necessarily say it's a competitor in a way. So I wouldn't necessarily say it's gonna bypass Maker, because even if let's say it's a better than Maker, Maker can observe it. So it's an interesting, way. But it also kind of shows that DeFi is not just about zero-sum game, right? So many different protocols, many different services, ideas, innovations can work together.
Thank you. And maybe I have one last question for you.
Sure.
How do you see the MakerDAO as a way of looking at Ethereum or Ether as a derivative? Because you use USD or USDT to buy Ether, and from Ether you mint out DAI. So then DAI, your input and output is still the same, which is still USD. And now the only variable you're playing, you're hedging, or you're playing with the change in movement in price is Ether. So if Ether goes down, you can use the DAI that you've purchased to pay off your collaterals, and then it gives you a good position for Ether. Or if Ether goes up, and then you can be borrowing more DAI so that you can be using it in the future. So do you see MakerDAO as a way of a derivative in the DeFi space?
So this is also something that I kind of briefly mentioned in my slide as well. But Maker system itself is over-collateralized loan, which also means that you can use it in many different ways, similar to how people can use it in traditional system as well. So for example, you mentioned, if you're very optimistic about Ethereum, yes, you can have Ethereum as collateral, mint DAI, buy more Ethereum, put it back, right? And then we already have systems like DeFi Saver and InstaDF that basically allow people to leverage pretty easily. So you don't have to do it manually like me before. So thanks to all those innovations. But yeah, so I think that it's a way for people to use it. I think that's also where MakerDAO system really comes in, is that a lot of people like to think that MakerDAO is just, or MakerDAO system is just stablecoin, which is, it is stablecoin, it has stablecoin, but if you also look deeper into it, it's more than stablecoin, right? It has a lending part, it has also ways for people to save, and then also even if you look at the bigger picture, that it's actually more than just stablecoin. So I think that's something that when we talk with a lot of DeFi people or DeFi projects, we realize that Maker is involved in DeFi deeper than just DAI, right?
Absolutely. Well, thank you very much, Du. Thank you for coming on board. And yeah, everyone follow Du. And then we'll have a next speaker. So the next person is Jeremy Khoo. He's the managing partner at CRC Capital. And Jeremy is an international business operator, founder, and blockchain entrepreneur who has successfully exited 3 venture-funded companies. Jeremy is also the managing partner at CRC Capital, which invests into early-stage blockchain innovation. So, hello, Jeremy. Can I have you on board? How can I put you on board? Okay, Jeremy is connecting. Yes. So Jeremy will be talking about, yes, that's Jeremy. All right. Yes, your floor to you.
Just 1 second. Can you hear me? If you can, can you give me a wave, Lisa? Okay. Because for some reason I can't even hear myself. I mean, as in I can't hear it. I can't hear you speak at least. Just 1 second. Lisa, could you say anything? Can you hear me? Yeah? Okay. So I just have a bit of a technical issue here in the sense I can't hear you, but we'll get to that. The fact that you can hear me just allows me to go on. So this is going to be a monologue for a while. If you're going to cut in, do a drastic wave or something, I can see you right there at the corner. So I'm Jeremy. I'm involved in so many things blockchain related. I even got my smart specs on, so I appear more intelligent as I start talking about investments and even how VCs are handling this blockchain space and the spur of DeFi as we go along. I think that what Lisa, Jesse, and even Du has shared has given you a really good insight on DeFi. It needs no further introduction. The fact that you're here means that you are already one of the pioneering batch, right? And the fact that you have hung on up past the 1 hour mark clearly shows your priorities, right? In this space. And I think that is one thing that all of us needs to question, right? Like, why are we really in this space, and what are we looking to be involved in? I think being involved in the technology is one thing, but at the end of the day, crypto has already carved out rather an entire industry, right? And that is what we are currently involved in, whether professionally or even as an investor. So I'm going to keep this entire presentation very brief. I don't have slides. Bear with me here. I'm just going to apply very pragmatic kind of advice from what we are seeing in terms of the fund, right? And before that, CRC Capital, of which I'm part of, is actually a crypto fund, right? Back in 2018, we decided that we're going to be a bit experimental, right? Getting out of the private equity, VC space. We decided that in crypto, there is a possibility of investing potentially in tokens, right, and token projects. And I think that we have taken the experimental step of investing in tokens more than equity, because if you are going to be involved in the crypto space, it makes a lot of sense to understand what these tokens represent, right? Whether it's in terms of the price development or even in terms of governance, right? Which I will get into in a moment, right? Specifically for DeFi. So CRC has done several investments over the years. We started in the whole ICO space with pre-sale stuff like that. And of course, right now with this really exciting DeFi movement, particularly in terms of the secondary markets and the attention that the big money has on it, of course, we have gravitated to this space as well. And I think this answers a question a lot of people like to ask, or a statement that a lot of people like to make, that wow, this is a great space, this is DeFi. And once the VC money finds this space, it's going to be super bullish. Well, I mean, the fact is the VC money has found this space, right? Institution is smart money. Institution has a huge team of analysts and different people who have always been plugged into this space. The VCs have never left, right? Despite the bear market of the last 2 years, right? They're still here. And naturally, when there are new opportunities, institution money, family funds, hedge funds, they tend to find their way around it, right? So I think let's get that straightened out first. So definitely smart money is already in, right, in this space. So if you're smart money, then you know what I'm talking about. If you are a casual investor, then I think that is something that you need to pay attention to, right, as part of your general investment philosophy, right, of which if you don't have one, then I urge you to quickly develop one, like right now, if you can, right, before you even put your toes into this. So yeah, I mean, Lisa, I can only see you like laughing, right? So I can't hear you. So if there's anything, you know, something on my face, anything, just, you know, just wave really rapidly. Okay, now this is not financial advice. I think a lot has been said about that. I think at the beginning of this entire event, the organizers, Lisa herself, would have said this already. And I think it is even more true specifically for any market that is red hot, right? That is, you know, in a state where of frenzy, right, and almost panic even, where FOMO is the story of the day, and people are just putting their money in anything that their favorite Twitter influencer or Facebook influencer or even YouTube influencer is shilling today, right? I think you need to be very practical about it. I think you need to, as the HO saying goes, DYOR, right? Do your own research and ensure that whatever you're doing makes a lot of sense. Again, with a larger look at how your investment philosophy generally is. Okay, so I'll say, I think enough about that. We go straight into why you're here for and what you're trying to understand with regard to investment in DeFi. Okay, so number one is DeFi is not new. DeFi is not new, right? Some would argue that Bitcoin was the first DeFi project. Some would argue that. It depends on which perspective and what you're saying, really, right? At the end of the day, everything crypto related looks at the secondary market, right? So in terms of finance, in terms of exchanges, DEXs, these are not new concepts, and these are all to a large extent, you know, particularly when you layer on a model of governance, when you layer on a model of like nodes and the concept of decentralization, then it becomes DeFi, right? But this is not new. I think also we need to understand what spurred on that whole crazy fervor of like money coming into the system, right? Number one is the idea of Uniswap, of which I think by now all how many is this? All 57 of us, right? Probably have a Uniswap account, not an account, but we probably have interacted with Uniswap in some way or another, right? And Uniswap is not new, right? It's been there for months and months, right? But I think when we talk about DeFi and the whole craziness in terms of the secondary markets, you would actually refer to the last 2 months and 3 months in which billions of dollars have come in. I mean, Du has mentioned like at one point there was 1 billion locked up, and then in recent times 9 billion, right, have been staked or locked up in DeFi. So clearly 9x warrants some attention to that period of time. So what happened, right? Well, SushiSwap happened, YFI happened, Maker, right, certainly, right, has been an OG of sorts, right, in the system. But the money started pouring in, and investments start pouring in when you had new concepts of what you call yield farming, right? New concepts of how huge ROI or APYs, annual percentage yields, are generated through the staking and farming process. Not new concepts, just new ways of returns that got a lot of people really excited. Now I want to point to the fact that you hear a lot of success stories, but sometimes you don't see the people who have lost money, right? And I think that is one thing you need to pay attention to. Look at everything from both sides, you know, of the coin, and in order to judge whether it's something which you should get your feet wet into. Also, DeFi projects are huge universe of projects. When you say, look, which project is worth investing in, which project is worth dipping your toes in, what are we talking about? DeFi is so huge, so many angles. I mean, when you look at YEarn, right, .finance, that alone is a gateway to so many DeFi products and so many things, right? I know most of us are interested in the vault, right, because it gives returns, right? But you know, there are risks, right, that you need to measure, and then there are returns, right? And you try and balance both sides of the coin. But my point is, there are so many different areas which you can invest in. When we talk about DeFi projects, there's Wi-Fi, obviously Curve. Technically, even Uniswap could be a potential investment, right? If you talk about liquidity pools and just being one of the early ones, one of the bigger share of liquidity pool, that could potentially give you returns as well. Now, I won't cover in that. I know Georgie asked me what are you bullish about. Now, I won't cover in that with regard to what project specifically or which would make you the most money, because that's not the intent. But rather to give you some parting thoughts on how you can actually look at these projects and define for yourself, right, which are good investment opportunities. So DeFi projects are greenfield technologies. Literally, they are bleeding edge, right? And the term bleeding edge literally means it can cut you both ways. It can cut you as well. Like, a lot of people lose money, right, in bleeding edge technologies, whether it's in pharmaceuticals, maybe even in edutech, prop tech. These are the new things that we're talking about. And certainly with DeFi, there's so many other risk exposure that we can go into. Now, I'll go now very briefly into these things. My favorite quote from Naval Ravikant, recently, if you're not following Naval, I really urge you to follow Naval on Twitter. And really, he tweeted this, I think, just yesterday, and already is my favorite Twitter quote. He says, the next big wave in DeFi starts when Wall Street figures out that crypto has built a better casino, right? I think that's super interesting, and it's such a loaded statement, right? You can look at it from a surface, or you can really try and understand what he's trying to say. And really, when you look at DeFi, you need to understand where these parts are coming from, right? Unfortunately, with any bleeding edge technology, there are tons of scams. Not all of them are very apparent. I won't name names, but there are a lot of projects that initially came out as scams, right? And then became legit, right? Now, how does that even work, right? Because money poured in, the projects choose to stay, chose to develop, chose to carry out whatever they said they would do, right? So this is one of the things. Okay, so I have a few points on how you should actually look at projects, whether it's farms, whether it's outright buying of tokens, outright buying of coins, or maybe even if you are a professional investor, looking at into equity in some of these early stage companies, right? Number one, just avoid scams outright. Avoid scams outright, right? This may seem like it's really easy to do, but even the best, right, get bested sometimes with regard to some of these projects, right? Do your due diligence on teams as usual. The powerful thing about DeFi, which outweighs any other investment opportunities out there, is the fact that you can actually do your own research on code, right? Well, if you're not an expert in Solidity, if you don't know how to read the code, ask yourself, are there any audits being done, right? How are people actually looking at the code? Are they buggy? I think just hours ago, there was a news release that BZX just had an attacker mint like 8 million USD of tokens, draining a huge portion, I believe, of the link reserves, causing some issues. And this is something that a lot of people are interested in, right? BZX as a project, and yet that happened, right? So it can hit us anytime. We don't know with regard to DeFi. That's why it's largely experimental. I think when we talk about scams, we also say, look, avoid rug pulls, right? You might have heard these terms, where the initial person putting in liquidity pulls the rug. What happened famously in SushiSwap, right? Literally that happened. And then the price found parity, it went down to $1 briefly, and then back to $2 plus, and now it's just fluctuating about there. And of course, there's a fantastic event that's happening with the Chef Nomi, who is the creator of SushiSwap, one of the co-creators, actually returning the funds, right? It's a whole conspiracy. I won't even go there, but that is something you want to avoid, right? Avoid rug pulls. And then you ask, how do I avoid rug pulls, right? Well, there are innovative projects out there who are actually building technologies that prevent that by locking up liquidity through a specific period of time, unlocking liquidity over certain milestones or time, right? For example, LID or even TEAM, which are two projects. I'm not saying invest in them. I'm saying that they are actually providing such tools. when you look at the community, right, as with anything, look at community, and then also, well, sushi is a series of words because orchestrated scams. Yeah, well, I can agree, right? It depends on how you look, but we'll look at that later. Look at the community, look at how they are rating the project, how they're talking about the project. Of course, right, the wisdom of the crowd is not always correct. Right, it's not always correct, and sometimes they say herd mentality is something you should avoid. True, but I think this is where you apply your own practical thinking as to how the crowd is reacting to the project, and if the crowd is certainly saying something bad, apply some common sense, right, into seeing what's happening. And if everyone is saying it's really good, step aside and say, okay, wait a moment, what if they're wrong, right, and then do your own research. As with any project in the DeFi space, look at liquidity, right? Be very clear how that is coming about, how that is happening. If there are investors coming in before that, big funds, VCs, that may not necessarily be a good thing, because ask yourself, who is selling, right, at the end of the day, and who bought at discount, who's going to sell on you, right? These are, I think, basic common sense that needs to be practiced, not said enough sometimes. Then the third thing, which may sound funny, it's utility. Why do I say it may sound funny? Because when you look at the DeFi space, a lot of times it looks like a circus, right? The tokens just go round and round and round and round, right? You borrow, collateralize, borrow, collateralize, borrow, collateralize. But really, sometimes you need to look at how is it actually working, right? In terms of utility, is it an AMM type of utility where you are actually earning a reward or incentive based on a market making strategy, or is it a downright Ponzi, right? Of which, of course, you want to avoid the latter, right? So that's one way to look at it. Then and speaking about Ponzi's, then you need to look at how sustainable are the returns. The problem with DeFi, which is also what sells it so strongly, is the fact that it's decentralized, right? And it allows anyone to create a contract at any point in time anonymously. Most of the projects which are done really well, fortunately or unfortunately, are anonymous, right? So you need to look at how this APY is created and whether it's sustainable or not, right? Last but not least, and something a lot of people don't talk about, timing. Are you early, right? Are you catching the wave? If you are a technical analyst, are you looking at how the token price is behaving over time for a proper project which does have a specific type of demand and supply, right? Are you looking at that? Okay, so I think my time is almost up. I'll just give some closing thoughts. When you are, despite everything I just said, right? Most of you may say, look, I know all these things. These are basic stuff. These are things that, DeFi has given us. Look at a code. Yeah, right, checked. So I'll give perhaps some more interesting nuggets. When you look at tokens, right, ask yourself, if you are buying a yield token, are you farming, right? If you're not farming, why not? Well, look at this way. If you are speculating on a yield token, that is an output token in which, a project like, let's say, SushiSwap does, right? Sushi is an output token, right? Yeah, you can say that, you put it back into the system, you stake liquidity, blah, blah, blah. But at the end of the day, it is a yield token that's generated from the system. If you're buying someone else's output, but you're not actually farming it, then you are denying yourself the opportunity of negating certain risks that come with it, right? The risks of impermanent loss, for example, in a liquidity pool, if you have no idea what impermanent loss, just Google it. There's tons of material out there. The risk of impermanent loss is negated through the returns, right? Through the returns. And a lot of these farms help you negate it further by stealing, right, or borrowing liquidity, depending on who you're asking, out of there to generate their own yield. Another thing that I will tell you is, from my observation, once liquidity actually goes, it never returns, right? And I think that this is something which is useful to pay attention to. So in many projects, people hold on to hope, right? They look at their token price, it goes down, and then liquidity is just being sucked out of the system. Less people are staking, and then we look at it and we say, okay, maybe we hold on, right? Sometimes myself, I'm guilty of a lot of these things in the bear market. We hold on to the token, hoping that it will eventually go up. But in the DeFi space, where we're looking at liquidity as a form of returns based on market making, based on interest, based on stuff like that, when it goes, it hardly ever comes back. Like, name me one successful case it came back, right? If you look at sushi, some people would say it never left, right? It never left. Like, it's still there. There's still tons of money being locked up, and it's true, right? But a lot of different projects, when the rug is pulled, right, or the liquidity has disappeared, it doesn't actually come back. So just understand where you want to cut your loss if you made the wrong decision, and then you know, that will help you, I think, generally become a better investor, whether professionally or as a casual investor, like all of us, like enthusiasts. Yep. So that's what I have. Unfortunately, my volume hasn't returned.
Can you hear me? Actually, can you hear me now?
Not sure if that's a.
Can you hear me? You can't hear me?
Maybe, you know, Lisa, maybe you can like type it in if you have any questions.
Yeah. So if you
maybe I can just address what Avalon said, right? It's not really a question. Go to ask the question part. Okay, sorry. Whoa. Okay, I'm there now. Okay, so the first question. So am I right in reading like the question from the top to the bottom? So Georgie asked, right, is the missing link for DeFi adoption interoperability? Is that a question for me? Or no? Yes? Okay. I'm not sure this is a question for me, to be honest, because this is not really about investment or anything. But I can address this nonetheless. I think when we look at the space of DeFi adoption, one very interesting thing is the concept of oracles, right? And the concept of interoperability between platforms. Right? Suddenly you have this whole host of different technologies, right, riding on the fact that they can actually hold hands and talk. And I think that that could be defined as a missing link. It depends what you're saying, right? The missing link to what exactly, right? When you say DeFi adoption, because in my opinion, DeFi adoption isn't here yet. I would define adoption as mass adoption, right? Meaning that either through the banking system or through the idea of like mainstream, mainstream, whether it's investors or users who are actually, using DeFi in a daily manner or in their activity and having that. But I agree that the concepts of interoperability really came about here. Why? Because there was money, right? It is always a very strong push factor, right, into how DeFi or how adoption works for that matter, right? So big money came in, hence a lot of blockchains are incentivized to say, look, let's talk to each other, let's figure this entire thing out together, right? And I think that exchanges have a very large part to play. Oh, is that a timeout?
No, I answer.
Or what? No? Okay.
Wait.
I can't actually hear. I'm not sure why. Okay. You answered that too? Okay.
Yeah, okay. So I think when we talk about DeFi adoption, like what JJ said, to what extent are we talking about DeFi adoption? Because DeFi adoption could be more people coming into DeFi, or it could be institutional players coming into DeFi, and that can be very different. So when we talk about institutional players coming to DeFi, one of the biggest risk in DeFi adoption is this regulatory risks. Because sure, there are a lot of people very interested in coming into DeFi, because if you look at all the different products or assets in the space, who is giving you returns? US treasuries are so low, corporate bonds are so low, the Fed is just buying all the bonds and just printing money like crazy. So traditional finance on its own, it's not giving you the yield. And where can you find place where the yield has been green for so long? One of the places, or one of the few places, is DeFi. But the thing is, there is no regulation to that, and a lot of people are very worried with that, and because money could just disappear. I talked about Rep BTC just now, where you take BTC, you change it to an ERC20 version of BTC, and you can use it in all the DeFi Lego stacks, right? But if the Rep BTC guys, they decide to just take the BTC and go, or the USDT guys, the Tether guys, decide to take USDT and go, that's it. There's no regulation to stop you. You can't call the police and ask the lawyers or SEC to check on that. So that's one thing, which is the missing link. The other one, so that's institutional side. We also have the retail side, which are people like you and me coming in to join DeFi. So I had a poll just now asking, do you have crypto? And some people have crypto, but there are also some that don't have crypto. They're just here to learn more. So the thing is, DeFi is not so easy. You have to learn finance, you have to learn technology, and to some extent, you have to understand economics. And these three are not easy subjects at all. So when you combine them together, the barrier to entry is quite high. Yes, there's a lot of information out there on newsletters, on YouTube, on Google, and that's a lot of information. But the thing is, DeFi is moving so quickly, so fast. So it's very difficult for people to catch up and very difficult for people to understand everything because it's so complicated. And that's why this entire webinar is to educate you, to help you with the education, to help you to understand what are the missing loops, what are the specific information that you can go and figure out more about, and then you can start learning more about them and make your right research decision. Everyone says, do your own research, do your own research. Sure, do your own research. But where do I get started? It's so complicated. It's information everywhere. And then you have information that is, 101 level. And then you have information that's like 401 level. So it's a huge spectrum. And that's one of the aspects. Now, when we talk about DeFi adoption from a protocol level, so protocols speaking to each other, okay, that's where interoperability comes in. Because let's say my project is built on, I don't know, EOS or Tron or one of these other, or Polkadot or Cardano. And the other person's project is built on Ethereum. They are not really interoperable, and that's where the app and app can't really stick onto each other. So it's like one is a Lego, one is an authentic Lego set, and one is like a fake Lego set, and they can't link to each other. So this is where interoperability will come in when we're talking about protocol and protocol layer. Okay, so that's done. Let's move on to the next one.
Is it my turn?
Can you hear me? Can you hear? Oh, never mind. So, yeah, interoperability is very discussed, but it's still quite difficult. Okay, the next question.
Oh, okay. So it is my turn. Yeah. Again, sorry about that. For those who are joining late, I don't actually have volume for some reason when I turn on my mic and start talking. But okay, I think if projects can print money, right? That's the question. If projects can print money freely, how is the DeFi space any different from a corrupt government, right? I think there are a lot of similarities between how the DeFi space works and how the government actually print money. And I think when we talk about government, we are always referring to the Federal Reserve, right? Which is obviously printing a ton of cash today for the purpose of trying to overcome the United States struggling with the pandemic, but also no thanks to them pumping your Bitcoin, right? And pumping gold prices to all-time high, at least from a speculator's point of view. So when you look at DeFi, a lot of it happens in the same way, doesn't it? I mean, it comes down to how the founders first created the algo, right? Governing the monetary policy for the particular coin. So, I mean, if you look at coins like Ampleforth, right? Or even its evil twin brother, I think it's Ampleforth, right? XMP. They all have like very public type of rebasing money supply, which is very interesting, and a lot of people would like to say that the government can print money, but at least it doesn't take away money from your wallet, right? But Ampleforth actually does that, right, through the rebasing. So to some extent, it's worse, right, in terms of the monetary policy than let's say a corrupt government printing freely. But at the end of the day, that's not the question we're asking, right? The question we're asking is, you are comparing to a corrupt government, but a project letting the algo do the work, letting governance, between the community do the work. That's a different ball game altogether, right? You might even say that he didn't stand to gain. Like, for example, Andreas, right? Creating Wirearn, right? The interesting part is he didn't even set aside YFI for himself, and that drew a lot of people into the space because there's 30,000 YFI, and then he has none for himself. So he's not intrinsically incentivized in that sense, or has a conflict of interest, so to speak, in token. Of course, it may not make you a fond investor because the guy isn't actually holding any, so to speak. But that is different from how a government works, right? A lot of times, the US government has been criticized for printing money and then keeping most of it, right? Like, I mean, they gave a handout of 1,200 to every US citizen, but how much of it really streamed down to the people who actually need it, right? I think that's really what we're addressing. So to cut a long story short, I think it's different in that it is open and transparent in terms of how the algo works. Every investor, every holder can see what's going on or what's going to happen in the next rebasing timeline. You're not reliant on some decision that you don't have a part in or you have no visibility over. I think that's the key difference. Lisa, am I tackling the next question, which is the fund? Okay. So funds usually invest across 5 to 10 years. How do I evaluate DeFi projects if the same tokens can fall to zero in a day? This is a very good question. And this is also what has gotten a lot of VCs scratching their heads over the mandate, right? And over what they can or cannot do. Which is why, when I started to introduce our CRC Capital at the start, I also mentioned that we are very experimental. Experimental in what sense? Experimental in the sense that even for our mandate, even for the way we make decisions, that has changed like drastically over how a PE fund or a hedge fund would operate. I won't go into detail exactly how we make those decisions or change those decisions, but I'll just say that to a large extent, it allows us a huge range in which we can change direction or even change the way we evaluate projects or even the timing, right? You always hear about VCs. For those of you who have raised funds, VCs could take 6 months to a year evaluating a project. But a lot of times for us, like we have to evaluate in a week, and then we have to put in money the next day, right? So that typically is different. So to answer your question is, we evaluate projects. We have our quick mandate. A lot of it, we have already done a few. We have spoken to a couple of other funds who have done a few, and then we adopt, right? And when we come across it, we have to make the step quickly. It's a yes or no quickly. And as we get into projects, nobody has 5 to 10 years. We make a quick decision before we enter, and I urge all of you to do this if you're a casual investor. We make a decision. What is our target, right? Where are we going to make our returns? Where are we going to cut our losses, if any? And then we go from there, right? And we make sure that we follow the mandate strictly, right? Because this is a law of numbers here, right? We make sure that we spread it out across different projects. So that's another thing we do, so that we can actually benefit from that, right? Spreading our eggs across a lot of baskets, so to speak. Yeah. Is there any other questions for me, Lisa, that I should be tackling? The next one? Okay. So would that be IE DeFi's for a project like Ample4? How do you imagine the founder vision of the world to be? I think when you read a project like Ample4 and you read their white paper, right? The last I read this white paper was, I think, 2 months ago, maybe, back around the time when they launched. So I can't remember word for word, so bear with me here. But when I read it, I saw the way they wanted to change the way the Federal Reserve work, and they wanted to build a better currency. So I think clearly it's from a disgruntled individual or founder who is like, look, I'm sick and tired of how opaque the Federal Reserve or other institutions are in terms of how they manage their policies. I'm going to do it better with code. Whether or not he has accomplished it is anyone's guess. As an investor, you just want to make money. If Ample4 is not your correct exit strategy, you probably say the project has failed, right? But not necessarily. And I think that's the overarching context, right? How you judge a DeFi project as being successful or not may not be hand in hand with your goals, right? In terms of whether you make money back from this project or not. Yeah. And a lot of times, when you look at the dot-com boom and the bust in year 2000 or so, a lot of the projects that so-called busted but hung on became, right, the fangs that you know of today, right? The Amazons, and all that you know of today. So, it's all about timing. It's all about, are we early? Are we too early? These are according to questions, and none of which I can review right now, right? Only time will tell. So next one, right? Okay, so what's the end goal? The individual ones from this. No, not that one. Which one? Down. Let me see. Is it the U tokens have no intrinsic value? That one? Okay. Let me read this real quick. I haven't seen it. U tokens have no intrinsic value, yet exchanges like Binance are rushing this now. Is that telling us the ecosystem players in our space care more about making money than innovations? Look, everybody in the space, everybody in any job, anywhere wants to make money. Let's not be too quick to judge to that, right? I think a large part of capitalism, a large part of how we have built out companies, in the last decade or decades or so, has always been, right, with the golden rule that it needs to be a real business, it needs to make money. People need to pay attention to their P&Ls. In fact, a lot of projects would have done better if they pay attention to their P&Ls, arguably. So I won't say that making money is bad for these particular exchanges, because that's their business. But your question really is about comparing that to innovation in this space. And I think it may be unfair to put the idea of an exchange supporting innovation on the fact that they are listing tokens with no intrinsic value, because first they have to serve customers. And what do customers want from exchanges? Very straightforward. They just want to trade. They're not looking to be in the next technology or to support so-and-so individual, right? They are there to trade. And it is in the business of the exchange to list tokens, right? And certainly in the business of exchanges to list tokens that people are interested in. But it is their duty to prevent scams, to make sure that they do appropriate due diligence. If your question is that, for example, sushi having undergone that rug pull, right, that actually reduced their price by what must be at least 50 or 60% in one downward candle, right?
Yep.
If your idea is that could be interpreted as a scam, then certainly, I mean, you could actually pin it down to these exchanges not having done enough due diligence on SushiSwap, or certainly should they be listing a token with an anonymous founder, right? This could be caught into doubt, which it actually has. It actually has. And that's a separate debate that is now ongoing in the space, of which I haven't taken a side. I'm not sure I would take a side, because I do not know enough about the listing process of these exchanges with regard to these tokens. Okay.
And then
the next one? Yeah.
So,
for you? Okay, yes.
Yeah. So to add on to whatever Jeremy has said, what I would add on is that if you look in the real world, there are a lot of things that are also listed on exchanges with no intrinsic value. And that exists. If you look at SPAC, it's a type of firm that has zero assets, but they're listed on exchanges. There are a lot of entrepreneurs and these kind of fund founders. They're over there that list SPACs, and then they will go ahead and acquire some companies. So things like this also exist in the real world. So you can imagine that as we move from the real world to a digital world, we're going to kind of take some inefficiencies along with us. Then the market will decide if we approve of this or not, because time will tell. Market in the long run is always right. And if these projects don't exist in the long run, then we know that the market is not supporting them, and then they will just diminish from our existence. So right now, I would say that DeFi is a big playing field. A lot of people are still playing and figuring out how all of these things work and see what works and what doesn't. Okay, so let's go to the last question. Jeremy?
Me?
Yeah, the last question.
I can't tell. Are you asking me to talk about this, Lisa?
Yes.
Yes? Okay. This question, right? That one you just answered. So I completely didn't hear your answer. So I apologize for that. Again, I have a technical issue with the volume. But look, at the end of the day, understanding how, I can even go further and expand on this question and say, look, it's not just as simple as that, right? There's just so many.
No. The last question on farming.
I think you have to type it out.
Yeah, it's there.
Oh. farms giving interest rate representation token
No.
is allowed.
No. All the way down.
That's all I see though. That's all I see.
Interest rate. Oh yeah. Correct. Sorry.
I'm good.
So, yes. Farms giving.
I'm good. As in, do I answer that question?
Yes.
Okay, I answered that question. Okay, so is that how a Ponzi looks like? Like I said, I can expand on this even further and say that there are even farms who are taking on tokens from farms, right, and then generating a yield, and then another farm taking yield token. Is this how a Ponzi looks like? Possibly, yeah, right. And again, that is something you need to be cognizant to, because a lot of times you are not the regulatory bodies aren't catching up quick enough and looking into this, and they're not certainly going to be someone you might have recourse to, right, in the event that you do inevitably invest in a Ponzi which explodes or implodes, right? So again, apply a lot of pragmatism, apply a lot of rational, a lot of common sense to how you're investing. If you do look at a system like that and say, look, this is a Ponzi, I'm interpreting it this way, then of course don't invest, right? I mean, you never know timing and how it works, and also depends on your risk profile. I think the idea that a system requires a lot more capital coming in order to boost the price or boost the system can always be interpreted as a Ponzi, right? But I would sometimes argue that the same could be said of stocks, right? Like when we talk about book value, like EBITDA book value, 1x of the PE, that makes sense. But 50x of a PE, what is that, right? That's just more money coming in to buy, right? The greater fool theory. But again, let's not label things, right?
Right. So Jeremy really had technical issues, and he's just gone now. So let me just summarize the last question. Farms giving interest rate representation tokens, so like YUSDC as collaterals, is allowing double collateralization. Isn't that what Ponzi looks like? So yes and no. I had a video on Ponzinomics. And the thing about Ponzi is that the mechanisms are basically economically robust, just like any other businesses out there. It's Ponzi when it's not accruing actual economic value, and then you're just scamming other people for money. So it's Ponzi when I'm only accruing additional value because someone else is coming in and I'm taking their money, and it becomes my returns. That is where it becomes Ponzi. However, right now it seems like we're just labeling everything as Ponzi, where it seems like we don't understand what it is, or we don't like it, or there's some doubts about it. We just label it as Ponzi. That's not really very fair, because Ponzi is where you, like legally speaking, Ponzi is where you take in a new person's money or a new person's funds as your returns. That's Ponzi. But if the system actually creates accrues value, then it's not Ponzi. Then their actual economic value being added, and that's not Ponzi. So that's it. I think we can end now. And thank you guys all for coming. I hope you liked that Q&A session. I'm so sorry that there was no Q&A session before. I heard all of your complaints, and that's why we have a Q&A session now. The next event, it's in 2 weeks, and there will be a panel session. So we're trying to mix a little bit of more Q&A, more presentation styles, and the third one will be more panel styles. Will there be another Q&A? I don't think there's additional time for the third session. I will try to figure it out, but the third session will be very fun. So we're going to have 2 panels. Maybe I'll try to squeeze in 3. I'm not so sure yet. The first panel will be on AMMs. So autonomous market maker, very interesting. And we're going to have Balancer, Curve, and Bancor. I'm trying to get Uniswap on. They seem very, very busy. So I'll keep trying. But we're going to have all 3 of them on, and we're going to talk about impermanent loss. We're going to talk about price slippage. We're going to talk about the different algos and mechanisms for AMMs. Super interesting. We're going to talk a little bit about bonding curves. I hope it's not going to be too complicated, but compared to what you have seen in session 1 and session 2, I hope it gives you some understanding, some foundation, so that you can move forward and we can talk about things that's more technical, because that's where you got to understand when you want to move into the space. Then the second one, the second panel is institutional. So we talk a lot about retail, right? Right now we're talking a lot about P2P, but the real big money is how can we take in the institutional money too? All these institutional derivatives, all these things that's very high level, only specific people can get. Now we can tokenize all these products and start giving the exposure to people like you and me, and we can get those returns as well. So that's the panel that I want to be hosting. Maybe we're going to have one more on interoperability with all the other layer 1 protocols, because right now most of them are built on Ethereum. And as you can imagine, super high gas fees, a lot of congestion, not very efficient. So hopefully we can have some time talking about interoperability, but then I also don't want to drag everything too long, so we shall see. I'll try to see if I can have a Q&A, and I'll keep you guys updated. Okay, thank you for joining us for the whole 2 hours. I'm really, really appreciative of your time. I hope you learned a lot. And okay, I'll try to invite Binance. So thank you guys. Bye-bye, good night, and good morning to wherever you are.